Hello, and welcome again, everybody. Welcome to the afternoon session of the plenary. Really looking forward to leading this conversation with Mr. Diop. There's a lot to talk about, but I'm just going to start with the macro landscape and how you see things right now, because so many conversations that I've had with people about the shape of the global economy, people seem to have been referencing this tepid global growth environment for a couple of years now. And I wonder how you see the opportunity as it pertains to emerging markets, because of course the very role of the IFC is to help mobilize private capital into emerging market economies. So how does it look purely from a growth standpoint right now?
Thank you very much, Joumanna. We have seen a rebound of the growth in emerging countries, 4%, which is higher than in the more advanced economy, and it offers an opportunity to really have more investment in those countries. As we can see, the fiscal constraints are still high in the number of developing countries, and therefore the space for public investment is reduced. There is a need now to attract more private investment. We have seen in some part of the world some positive trend, and we are seeing more and more opportunity to invest in infrastructure, in energy, in logistics, in sectors which are important for increasing the productivity of firms in developing countries, and therefore create jobs which are so much needed in this part of the world.
Do you think that investors are being drawn to emerging market economies in an environment where advanced economies seem to be slowing down, the relative opportunity becomes a lot more attractive?
I see more and more interest, particularly investing in infrastructure. We are just give an example in part of the world which is the less advanced. In Africa, we have seen recently a big conference that was held 2 weeks ago in Dar es Salaam, aiming at connecting 300 million Africans to the grid. Out of the 600 million Africans who don't have access to electricity. And it was clear that we need to have the private sector. The governments are committed to close to, the development financial institution committed up to 48 billion billion dollars or CFA. And we understand that the private sector needs to be present in those investments. So that's a good way to show that today there is a renewed interest in investing in infrastructure, particularly in energy. When you look at what is happening today, a couple of days in Paris with the AI conference, it's clear that we need more electricity to feed this data center and all this investment in AI, which is transforming. Actually, a lot of people consider that AI is a general purpose technology. It means that it will change fundamentally the way people are producing. And if the less advanced country don't have electricity, they will not be able to be part of this transformation which is happening right now.
Yeah, do you see it as an opportunity for those countries to catch up, or does it present a challenge in that if that energy security is not provided, many of these countries will actually be left behind with the AI advances?
It's clear that if you don't have investment in the fundamental which are energy, you will not be able to take advantage of it. I see already a lot of application of AI happening in more less advanced countries, in agriculture. We have also in health. We have also in activities such as maintenance. You will be surprised that AI is used a lot to identify the leakages in network or things like that, in optimizing the use of resources. That's why at IFC we have increased significantly our portfolio in startup working on AI. We have been talking actually with companies here in the UAE about what we can do to attack those sectors. And we're investing a lot in a data center. Just to give a sense, last year we were the largest investor in infrastructure, in infrastructure related to the digital economy in Africa, by helping financing fiber optic, data centers, access to electricity for those. So we have an opportunity here to leapfrog, but it will require a few things. First, to continue investing in education, because we need to have the labor force needed to be able to use these instruments. Secondly, you will need to have a condition so that you can accelerate the production of electricity at scale. And I want to emphasize that we are considering that today gas to power is an important transition source of energy for developing countries when they couple it with a use of renewable energy. So we are pushing in that direction. The second direction is to push on logistics, because we are seeing more and more countries who want to increase their regional supply chain and be able to transform more the rare mineral or the other minerals that they have in products that can be useful for the digital industry and the digital economy, and that offer another opportunity. Lastly, the current situation in the world shows that we need to diversify the source of the supply chain. And an over-concentration of the supply chain in some products create a risk from part of the world, because whenever there is a shock in that part of the world, the rest of the world is affected disproportionately. So it's important to diversify today the supply chain that we have.
Yeah.
And I would say that I would like just to take that opportunity to thank very much UAE for the role they're playing. Actually, the largest company investing in Africa in renewable energy is a UAE company. We are working with them also in Central Europe. We are working with them in Central Asia, in countries like Uzbekistan and others. And we are seeing there that investment coming from UAE to the south have been increasing significantly.
It's interesting because I wanted to pick up on that theme of the emergence or the pickup in south-to-south lending. So countries from the global south lending, channeling FDI into other countries in the global south. Is that a phenomenon that you think is going to continue to pick up speed?
Absolutely. We've been increasing basically tenfold the flow between UAE and developing countries in the last 3 years.
That's just the UAE and
the UAE. It was around $200 million, which is not a lot. Today we are around 2.5 billion of investment. So it's in renewable energy, it's in infrastructure in general. So we are discussing now expanding the scope of investment coming from UAE. We are looking at different verticals, particularly the water sector. We are looking at continue developing on energy. Logistics is a very important part. And I think international artificial intelligence will give a good opportunity also to invest in sectors like health, pharmaceutical, and so forth, where these might be important tools. So we are seeing a very interesting dynamics, which is moving very, very fast from UAE, but also other GCC countries which are looking at institutions like ours to be able to use our intelligence, our knowledge of those countries to be able to channel more investment. By doing what? By helping in making the regulatory framework much more predictable. There is still a bit of uncertainty for investors. By tackling a couple of constraints that have been faced, such as local currency, financing in local currency, guarantee. There is a big push for guarantee. And within the World Bank Group today, we have an entity called MIGA, which is specialized in guarantee. And they are just recently tripled their offering to the market. The last element is that now more and more we are looking at projects not in terms of what we can finance through our balance sheet, but how we can structure those projects to attract much more private capital to those countries, including sovereign fund and institutional investors.
So I want to pick up on a couple of those points. The first point vis-a-vis supply chains and the importance of diversification of supply chains. We're in an environment now where trade protectionism is on the rise, barriers seem to be going up, countries are pursuing country-first policies. Is that going to trickle down at all into investor sentiment and appetite to mobilize capital into emerging markets?
What is a constant is that a country needs infrastructure, a country needs electricity, a country needs to produce food, a country needs to create jobs. I think that's what's a constant in this situation, and I think that these needs haven't been reduced, they're actually increasing. And when I'm talking about creating jobs, we need to think about not necessarily displacing jobs from one place, one part of the world to another one, but to create jobs that actually cannot be even created in other parts of the world or exported. Let me give you an example. Today, UAE is investing very heavily in hospitality. Hospitality is a sector, for instance, which creates tourism, a lot of jobs and which is specific, which is local. It cannot be exported from another part of the world. Health services, similarly. And we have a certain number of agriculture production, similarly. So there are a lot of activities where you will be having a win-win solution by creating jobs in part of the world, by creating conditions that will reduce the pressure on migration, and that will also be able to create much more demand and growth in those countries, which will be also able to import for countries which are producing goods in places where they have a comparative advantage. So I think that overall, let's look at what needs to be done in these current circumstances, and there is so much to be done in terms of investing in logistics, in basic infrastructure in those countries, that if you keep our focus on that, we will be able to deliver for those countries and show that the solution, what is happening there, is helpful to the rest of the world as well.
Yeah. You also touched on some of the facilities that are in place to help facilitate lending, the advisory services, of course, and then you touched on the World Bank lending facility. To what extent do you think blended finance is going to be key to unlocking more capital into emerging market economies? At what point do you need to bring in the public sector to attract the private sector?
No, it's clear that the private sector cannot do it by itself alone. The public sector cannot do it by itself alone, let alone the philanthropy. So we were in a world where the philanthropy were working on one side, the government were financing on one side, other side, and the private sector was doing it. What we understood in the last decade is that the solution is to work all together. And let me give you an example of what we are talking about when we are talking about blended finance. If today we want to attract the private sector to invest, for instance, in water or sanitation, sanitation is quite expensive in general in a poor country. But at the same time, the government is concerned about affordability of those services. Yeah. The philanthropy can, and the grant money that countries are providing can be used to buy down the cost, to de-risk those investments, and therefore make it more affordable to the population at large. So by doing that, you increase the scope of people that you can reach through private sector investment. You reduce the pressure on the fiscal, and at the same time, you are able to reach your social target. So more and more philanthropies are really thinking about how to leverage private sector investment in countries to have the multiplier effect that you want. Yeah. And that was at the heart of the conversation that we had recently in Africa on the M300, where we have philanthropies which came as a group and say that we will bring our money to be able to de-risk investment, to reduce the cost, to make it more affordable, and therefore be able to reach much more people than we would have done it by investing alone in this sector.
One part that we didn't talk about was the other side of the equation, which is countries actually making themselves ripe for investment. So as an investor, you're going to look for macroeconomic stability, you'll look for political stability, you'll look for sound governance. What do countries on the receiving end need to do in terms of reforms to keep attracting the capital that they need? And also, can you give us an example of a country that has done the right things and has been successful?
Absolutely. We last year, the president of the World Bank Group created what you call the Private Sector Investment Lab. We included the 20 top investors and funds, spanning from BlackRock to Temasek and others, and at the CEO level to discuss about it. What are the constraints for you to invest more in emerging economies? And a few things came out from that conversation. The first point, which is related to what you are saying, is uncertainty. People want to make investment and decisions which are spanning over a long period of time, need to have much more certainty on these investments. Second one is that because of this lack of certainty, you need to have more guarantees. So they wanted to have more guarantee. The third was local currency that they want, because often investment are facing that tension of having expenditure in dollars and revenue in local currency. So this currency mismatch is creating a pressure for investors. The fourth one is how can we use an institution like the World Bank Group with a footprint in all countries to be able to originate projects and bring them to the market and build a platform. So what has been done in this area to reduce the uncertainty of investors is to use the public side of the World Bank Group to really, in the dialogue with the government, to take all the reforms that are needed, spanning from capital market development to regulation to using the information that we are available. And let me tell you the type of information that we have. We have the GEMS, which has been a recent database on the ratio and the credit failure that you have in some countries, and that now is made available to the public at large and investors so that they can better appreciate the risk that they are facing. We have our doing business data, which are useful also, and provided to investors to have a better understanding of the risk. That this reform coupled with the guarantee, will lower the level of risk that investors are facing, and therefore reduce the risk of premium and make it much more attractive for long-term investors in those countries.
Makhtar, that's a great place to leave it. Thank you so much. Thank you for the conversation.
Thank you so much, Joumanna. Thank you.